Welcome back to Morning Markets on Friday the 13th of May. On screen we can see the key market moves from yesterday. As they demonstrate, we experienced volatility within equity markets as equity markets produced a negative return on a global basis. However, government bonds provided some diversification as yields moved lower and therefore prices moved higher, which is useful within a diversified multi-asset portfolio solution. Much of the downturn in equity prices yesterday was the wash-through of the US inflation print, which Matt discussed yesterday, which was showing a slight moderation in terms of the print, but inflation remaining high nonetheless at 8.3% year on year. The numbers on screen show a greater impact in regions such as Europe and Japan, which may seem unusual. The reason being is the US market closes later in the day and therefore market analysts had more time to digest the information during trading hours. The secondary component coming from the US yesterday was the report from the Department of Labour showing the number of Americans filing for initial claims of unemployment benefit. The number has ticked up over the last 2 weeks. They are now around 200,000 people making initial claims each week, and this was around 180 to 190,000 through March and April. To give you some context, this number is a vast improvement from the levels of 6 million per week which we had in the height of the pandemic, as you may expect, but it's actually also below the pre-pandemic levels, which were around 220 to 240,000. Whilst businesses face a number of cost pressures linked to the tightness of global supply chains and higher energy prices, demand for goods and services at this point in time remains buoyant, and therefore in the current earnings season we're not seeing signs of layoffs across firms in terms of staff. In fact, quite the opposite. Labour markets remain very tight. The unemployment in the US is around 3.6% at this point in time, which is the lowest level in half a century. So there's great demand levels for labour at this point in time. Also, the Bureau of Labour Statistics highlighted that at this point in time there are on average 2 job openings available for every unemployed person in America. So this is presenting pressure on the cost of hiring, and this was demonstrated in yesterday's Producer Price Index reports. As we've discussed, the Fed are taking action in terms of raising interest rates and reducing their intervention in the bond markets to really cool demand for goods and services, which is whilst also supporting economic growth. The final point on the day for me was the UK Economic Growth Report, which showed positive growth for the first quarter of 2022 of 0.8%. This was slightly softer than expectations, but demonstrated growth in service sectors such as IT, accommodation, food, transportation, but also on the production side in terms of manufacturing for goods. The total value of all goods and services in the UK is now 0.7% higher than pre-pandemic levels. In terms of the reaction in the UK bond market, we had positive returns from government bonds as yields moving lower as markets were anticipating a less aggressive move from the Bank of England in terms of rate hikes in the face of slower economic growth. We'll continue to keep you up to date on all of these channels and the evolution of these key topics. To find out more, please do subscribe to our YouTube channel and keep up to date here on Morning Markets. Thank you for watching.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.